Welcome, tigers and tigresses. Tigress. What is the plural of tigress? Anyway, tigers and tigress. This is David White sitting in for the one and only Tom O'Brien. Tom will be back on Monday. But I'm going to be sitting in here. We're going to clean up this week here and take a look at it. 1655.83 on the S&P closed today, off 5.5 points. 3.3 billion shares on the consolidated New York Stock Exchange tape, which is a little bit weak. But after yesterday's huge volume down day, probably not uncommon. We've got 3602.78 for the close on the NASDAQ. We had 1.4 billion shares there. The Dow Jones Industrial closed at 15,081, and it was off 30 points. So we have a market on expiration day. No one should forget that. Well, most likely, I'd been thinking was going to close around the 1660 to 1665 range. There was some pretty good indications, at least in the options activity, that would say that. Of course, during options expiration, we always have a desire for options market makers to push stocks around a bit to make sure that they close almost perfectly on even numbered or odd numbered hit points, so that the maximum amount of calls and puts will be just trying to get my computer working here, and it looks like it is having an issue. It says the following have become unresponsive. Okay. Well, here we go again. Get my computer rolling. I wanted to actually pull up Apple here and take a look at it. See, where is it at? AAPL. Where is that at? Now, well, let's go to the secondary source here, and we will take a quick look at it. Apple closed at 502.33. Probably close enough. I figured it would close somewhere around $500. But we get a lot of pushing at the end of the day. Of course, those option market makers would love for those puts and calls to hit on the $500 mark, and then all 500 puts and calls would go unexercised at expiration. But we'll have that. Now, probably what everybody on the TFNN bandwagon would like to know is how gold did today. Last tick is up $11.90, $1,372.60 as the last tick on the current gold contract. This thing really took a rocket when several very large street names decided to go long gold yesterday. Unclear whether or not they caused a mini short squeeze for a lot of people that had been thinking gold was truly over. And what can you say? 1275 to 1372, a nice move out there. And of course, if you're not familiar with me, on Friday afternoons, normally I sit in with Tom O'Brien. We talk technology. This week in the Tech Insider, I'm talking a little bit about things out there, but we want to go back to this day in 1896, because why salmon fishing near the Klondike River in Canada's Yukon Territory, George Carmack reportedly saw nuggets of gold in the creek bed. His discovery started the last great gold rush into the American West. And, of course, there's a little bit of a gold rush around TFNN. Of course, Tom O'Brien writes the weekly gold report, kind of the go-to guy, even on CNBC, for being in gold. But probably the most interesting thing about the gold rush was that the people that made the most amount of money were a handful of people that found gold, and a ton of people that sold jeans, like Levi's. We have found a lot of people that made the most amount of money were doing things like selling picks and shovels. So in this week in the Tech Insider, there's a business that everybody's saying is going to go to the moon. I think it's going to have problems doing that. But even if they aren't the winner in the space, there are always the pick and shovel businesses out there, and I pointed everybody to one of them today. Also went back and looked at a warning I had for CRE. CRE actually was off fairly strongly this week on earnings. I had been worrying about that one, or warning about that one, in the May 31st version edition of the Tech Insider. Let's go ahead and put that up in the Tiger's Den and on Tiger TV so people can see. But this thing came down with just amazing force. The last couple lows were 3.1 million and 1.8 million at the $57 level. Blew through them again today with very extensive volume out here. Still 22 million 7 million shares today, but 22 million shares yesterday. So maybe this thing is finding a little bit of support out here. CRE is a light emitting diode lighting, and I wrote about a new technology that could come in and cut the legs off from under CRE. It looked to me like everybody was getting just a little optimistic in this last leg. If you are watching on Tiger TV, one of the nice things here is that we can show you the power law vector indicator number, which is in the art of timing trade charts. And show you that the energy in this last leg, although almost identical in the price point, did come off by about 25% in this last leg up. But there are some competing technologies, and we talked about that in the May 31st edition. We also brought it full circle this week, talking about maybe how we can make some money in this sector going forward. Other new issues out here today, I think I talked about everything in the news. Yeah, pretty much. I think that's, for market news, probably enough for today. When we go back into what is spooking people in this market and why we're down 5 points, or a little over 5 points on the S&P on an expiration day when most of these go out almost flat. And it has to be a little bit of news in Egypt. I suspect that there's a much bigger cloud on the horizon. What we have found is that the net long-term U.S. security flows are back to levels almost only seen in late 2007. Of course, all of our economic well-being in the United States is disposed or because of China's and Japan's willingness to buy our Treasury and Treasury bonds. What did we find out last month? They were starting to sell them, and they sold them almost as hard, about probably 90% as hard as they did in the depths of the crisis in 2007. So there's a few more dark clouds on the horizon than I think a lot of the national press is talking about. Right now, we are at 1655 on the S&P cash. I suspect we're going to be going down to 1620 on the S&P cash, and at that point we'll find out whether this market is going to bounce, but that would probably be the next stopping point. Monday and Tuesday are what's known as options rollover. This is going to be one of the bigger ones of the year. This sets up options into September and October, especially with the Fed having meetings and talking about tapering. I suspect we're going to see a lot of volatility in Monday and Tuesday as those new option positions get put on. And we're also going to see probably the market head back down on Wednesday. So we may have a little respite of a day or two. But normally options roll over where the positions that were on, equity positions, were taken off, and new hedges and new positions for the next few months are put on. You get a lot of up and down intraday, and just kind of chop. And normally by about 2 o'clock on Tuesday, that is over. So don't get too excited Monday and Tuesday, but by Wednesday we should see a big trend in this market, and decent volume out here. 3.5 billion shares at the end of the day on the consolidated New York Stock Exchange tape is much better than we've seen in months on a Friday. So keep an eye on that. Also, keep an eye on those those numbers out there. Of course, if you want a chart to look at, probably the thing that we'd want to be looking at is this TLT. And well, let's go just a little longer here. But if you're looking at these bonds, we are finally getting into these long-range gaps that I've been looking at, and these things in the TLT are just under the 105 mark. We'll be back in just a minute. You can always give me a call at 877-927-6648.